The SEC just officially classified XRP as a digital commodity. 7 spot XRP ETFs are live with $1.44 billion in total inflows. Goldman Sachs is sitting on $153 million in XRP exposure. And today, March 27th, 2026, the SEC faces its absolute final deadline to approve the next batch of XRP ETF applications. XRP is trading at $1.36. That is the single most important paradox in crypto right now. Not just for XRP holders, for anyone trying to understand how institutional markets actually work. And if you are watching this video because you hold XRP and you are trying to figure out why every major catalyst keeps getting absorbed without moving the price, this is the framework you have been missing. I want to be clear about something before we get into this. I am not going to tell you XRP is going to $8 next week, but I am going to walk you through a specific 3-stage model that explains exactly why the price is where it is, what institutional capital is actually waiting for, and what the trigger sequence looks like when it finally moves. This is not financial advice. I am sharing the analytical framework I use when I look at this data myself. Let us get into it. Here is the paradox in full. The SEC and CFTC issued a joint interpretation on March 17th, officially naming XRP as a digital commodity, putting it on the exact same legal footing as Bitcoin and Ethereum. That ruling was contained in a 68-page document that named 16 major digital assets. For XRP, it ends the single biggest compliance barrier that has kept institutional capital on the sidelines since December 2020. Pre-ruling, compliance departments at major financial institutions treated XRP as a liability. The concern was that holding or facilitating XRP trading could constitute aiding unregistered securities activity. That concern is now legally extinguished. And yet, XRP spiked to $1.60 on March 17th when the news dropped, and then it gave back the entire move. It is now sitting at $1.36, down from $2.40 in January, down almost 40% year to date. The fear and greed index is at 14, extreme fear territory, and the community is asking the same question it has been asking since the ETFs launched, since Ripple Prime went live on the DTCC in March, since Deutsche Bank and Societe Generale partnered with Ripple. Why is the price not responding? Subscribe to this channel if you want XRP analysis that gives you a framework, not just hype, because the answer to that question is more important than any price prediction I could give you. Let me walk you through stage 1 of the institutional adoption cycle. When a major regulatory unlock happens in any asset class, commodities, equities, a fixed income, there is always a gap between the moment the legal barrier falls and the moment institutional capital actually deploys. This is not a conspiracy, it is logistics. When the SEC and CFTC issued the commodity ruling on March 17th, institutional compliance teams did not immediately authorize XRP purchases. They scheduled review meetings, they drafted updated investment policy statements, they consulted legal counsel on custodial implications, they waited for their prime brokers to formally update their asset classification frameworks. This process takes weeks, sometimes months. Look at the data from the Bitcoin ETF launch cycle. When spot Bitcoin ETFs were approved in January 2024, Bitcoin did not go vertical on day 1 of the approval. The price actually dipped slightly in the days immediately following approval. It took approximately 90 days for institutional inflows to begin accelerating in a sustained way. The market structure for XRP is running a similar playbook, but we are only 10 days out from the commodity classification ruling. We are still in stage 1. Stage 2 is what I want you to understand, because this is where the Clarity Act comes in, and this is where today's date becomes critical. The commodity classification from the SEC and CFTC is powerful, but it is an interpretive release. That means a future administration, a future SEC or CFTC chair could reverse it. One of the critical points made in this week's congressional hearing is that without permanent legislation from Congress, everything regulators have built could be undone the same way Gary Gensler's team undid years of prior guidance. That is not a hypothetical. That is exactly what happened in reverse between 2020 and 25. The Clarity Act is the legislation that makes the commodity classification permanent and irreversible. It passed the House with 294 votes, bipartisan overwhelming support. It is now working through the Senate. Polymarket puts the odds of it being signed into law in 26 at 70 to 72%. Brad Garlinghouse, who is not exactly known for understating his position, has publicly put the odds at 80% by late April, but here is the nuance that most coverage is missing. Senator Lummis made it explicit this week. The practical legislative window is not infinite. Congress only has approximately 3 working months left before midterm election dynamics begin consuming Senate floor time. If the bill does not clear Senate committee markup by approximately early May, the next opportunity could be 2028. This is the actual urgency, not the price action, the legislative clock. If you think about XRP's price as a function of what institutional capital can legally and logistically do with it, and you map that against the timeline, Stage 2 is what unlocks the actual capital deployment. Stage 1 was the interpretive ruling. Stage 2 is permanent legislation. When institutional investors know the rules cannot be reversed, that is when pension funds, endowments, and sovereign wealth funds allocate at scale. Standard Chartered has published their scenario model explicitly. Without the Clarity Act, their target for XRP is $2.80. With the Clarity Act, their target is $8. That is a 285% difference in their price forecast based on a single legislative event. And Polymarket currently prices that event at 70% odds of happening this year. Hit that like button if this analysis is hitting different than what you have been seeing, because I want to get to stage 3, and this is the part the data actually supports right now. Stage 3 is on-chain confirmation. This is where XRP exchange reserves become critical. Right now, XRP exchange reserves are at historically low levels, while ETF inflows are sitting at $1.44 billion, 84% of which has been retail. The institutional money has not arrived yet, but whale accumulation data from CryptoQuant shows a pattern of coordinated off-exchange movement that preceded every major XRP price event in the past 3 years. When Stage 2 completes, when the Clarity Act passes or clears a major Senate milestone, watch the exchange reserve data. That is the leading indicator for what happens to price. Now I want to address the elephant in the room. Coinbase has pulled their support from the current version of the compromise around stablecoin yield provisions in the bill. That is a real headwind. Coinbase is one of the most politically active entities in crypto. Their opposition to specific language around stablecoin yield is not opposition to the whole bill. They have been publicly supportive of the market structure framework, but their resistance to the yield compromise language is slowing the Senate process down. What the White House crypto advisor Patrick McHenry and others have said publicly this week is that the fundamentals of the bill are intact. The yield language is the last remaining negotiation point. Senator Lummis reposted the confirmation that it is, quote, all going to work out bullish. The CFTC chair said this week that the goal is to have the bill on the president's desk within a few months. The consensus among the people closest to the process is that this gets done. The question is timing, and for XRP holders, timing is everything right now. I want to give you one more data point that I think is underappreciated. The SEC's final ETF application deadline is today, March 27th. That deadline covers additional spot XRP ETF applications from Grayscale, 21 Shares, Bitwise, Canary Capital, WisdomTree, and CoinShares. With the commodity classification now in place, the SEC has limited statutory ground to deny these applications. Analysts have noted that the approval path is structurally cleaner for XRP than it was for Bitcoin at the equivalent stage, because XRP's commodity classification was issued simultaneously by both the SEC and CFTC, removing the jurisdictional ambiguity that complicated early Bitcoin ETF filings. of these approvals come through, and market consensus is above 90% likelihood, that opens XRP ETF access to pension funds and IRAs at scale. The institutional capital that has been on the sidelines is not absent because it does not want XRP exposure. It is absent because compliance frameworks have not been updated, legal counsel has not cleared the new taxonomy, and prime brokers have not formally reclassified XRP's custodial requirements. That process is happening right now, in real time, across every major financial institution in the world. We just cannot see it from the outside. Share this video with one XRP holder who has been frustrated watching the price not respond to fundamentals. Because the framework here is what separates people who understand what is happening from people who are making emotional decisions based on price alone. The bottom line is this: XRP is at $1.36 today, with one of the most consequential legislative catalysts in digital asset history moving through the Senate. The commodity classification is done. The ETF deadline is today. Goldman Sachs has $153 million of skin in the game. The institutional adoption cycle has a known playbook and a known timeline. Stage 1 is complete. Stage 2 is the legislative clock, and every serious analyst covering this space has placed the over-under on that clock somewhere between April and early May. I am not going to tell you what to do with that information. This is not financial advice, but I will tell you this: the community that understood the Bitcoin ETF cycle 12 months in advance and positioned accordingly did not do it by watching price charts in isolation. They did it by understanding the institutional adoption sequence. That same sequence is playing out right now for XRP. Comment below, do you think the Clarity Act clears Senate committee before May? Yes or no? I want to see where this community stands, because this is the single most important variable for XRP's price trajectory in 2026. I read every comment. Join the XRP Army membership for my weekly deep dive data reports and institutional flow tracking. Link is in the description. The data is pointing in one direction. The legislative clock is ticking. And today's ETF deadline is not the end of the story. It is the beginning of stage 2.